I've been bearish on AMD stock, but I just did the math. I'm going to show you how AMD stock can reach $5,000 a share in the next 5 years. Then I'm going to show you why it might not happen. We'll also look at what that might mean for NVIDIA and Broadcom and other stocks in the AI infrastructure space. Are you ready? Let's go. Let's start by talking about how high AMD stock could go. For starters, AMD is currently trading at $490 a share. This is up about 5% yesterday. Market cap is approaching $800 billion, PE ratio just over 160. AMD is the rising star of AI compute. You have NVIDIA, that's the 800-pound gorilla. You have Broadcom, that's sort of off doing these custom ASICs chips. And you have AMD, which is basically trying to do the same thing NVIDIA is doing, some variation, but do it at lower cost and somehow execute better. AMD's current state of affairs is important for seeing where it can go. AMD has been growing, and its PE ratio, which indicates its predicted growth by the market, is much, much higher than NVIDIA. NVIDIA has roughly 10x the market share. So there's a lot of opportunity for AMD to grow if they can take some of that market share. And that's part of the story we're going to talk about today. Revenue in the last quarter was about $10 billion. Net income, non-GAAP, was over $2 billion. AMD's share of this AI data center market is about 8%, where NVIDIA is about 80%. Broadcom somewhere between 10 and 12% with its custom chips. There's also some in-house development. Google makes its own chips. I think it's Amazon Web Services makes its own chips, but that's all at fairly small scale. So it's really NVIDIA, Broadcom, and AMD. AMD's gross margins over 50%. Their net margins in the ballpark of 15 to 20%, depending on whether you're looking at GAAP or non-GAAP. They are behind NVIDIA on revenue. They're also behind NVIDIA on margins. NVIDIA has more like 80% gross margin, better net margin as well. That background I just gave you is important for understanding how you could see NVIDIA rise dramatically. The first part of the story is demand for AI is growing fast. I think it's actually modest to say AI demand might 5x in the next 5 years. I think it might 10x, but let's go with a 5x in demand for the next 5 years. The second step for AMD to succeed in this story is for AMD to double their market share, which would get them to 16%. It would still be a fairly small player in the AI data center server hardware space, but 16% would be double where they are now. They are generally a lower cost competitor than NVIDIA in roughly the same space. So if they're able to sell these hyperscalers and neo clouds and others on, hey, you should be buying our hardware instead of NVIDIA, that's one way they can increase their market share. There's other problems we'll talk about later, but let's go with the story. The market goes up 5x, their share goes up 2x to 16%. That's a 10x in revenue. On top of that, their current margins are 15 to 20% net margin. You could see their net margin going to 30%, right? If they just improve their profitability, if they improve how they do things, if they increase scale so the operating costs are spread over a higher volume, you could see them hitting a 30% net margin. And that's a big chunk of what we're about to talk about. If you double the market share and you 5x the market, you 10x their revenue. That takes their quarterly revenue to $100 billion a quarter, $400 billion a year, heading towards $500 billion a year. If you have a 30% net margin on $400 billion in revenue, you're well over $100 billion a year in net profit. And you're heading towards $150 billion a year in net profit. That's a huge, huge statement. That's a huge chunk of money. And that's more than 40x where they are today. If their net profit goes up 40x, their stock going up 10x is not that much of a lift. So in that scenario, let's say the PE ratio comes down to a more reasonable 50 instead of the current 160. That 50 PE ratio on a $100 billion net profit would be a $5 trillion market cap, nearly an 8x on the stock price. If you figure it's really $130 billion in net profit, and you get a 50 PE ratio, you're at $6.5 trillion, and you're just over an 8x on the current stock price. So you're over $4,000 a share. You're not very far from $5,000 a share. And in this story, we're using conservative numbers, assuming we get all the big things that are stretches. The $5,000 share price is not out of reach within 5, 6, 7 years. So that's a 10x. A 10x is in reach for AMD with this bull scenario with this napkin math. Now we're going to take a short break to do our AI stocks report. We're going to come back and we're going to talk about what might go wrong with this rosy story for AMD. Monday was a good day for AI stocks. You can see both the AISRX index and the AISRY indexes I created were up 3%. You can see AMD in particular up 5% on the day. ASML up a bit more. Broadcom up. Most of the stocks are up. Micron up, Marvell Networks was up. We're going to talk about that in a minute. The hyperscalers were generally down a little bit. Why? Who knows? Volatility, volatility, volatility. Our favorite stock, Tesla, was up nearly 5%. A lot of this is just recovering from the collapse at the end of the week last week. Just typical market volatility, but some good news along the way. Marvell Technology stock jumped about 10%. On news, they're going to be included in the S&P 500 index. They also got a boost recently when Jensen Huang said they would head towards a $1 trillion market cap or be the next $1 trillion market cap company. They currently have a market cap, at the time he said it, around $200 billion. They're up to $230 billion now. So it's a long way from $1 trillion, but Jensen pumping them helped, and this S&P 500 inclusion is certainly going to help them. ASML may have gotten a bump because Elon Musk is in talks with them about getting lithography equipment for Terafab, which is going to be a large fab. Of course, the media has to say that some employees, they don't say which level of employees complained about being involved with Elon Musk. Were these union reps? Were these high-level engineers who actually matter? How does this become, how is this relevant to the story? Who knows? But the fact that Elon is in deep talks with ASML about acquiring lithography machines was considered an important news story for ASML, and that boosted the stock. ASML makes lithography equipment that is essential to building all the AI technology we talk about, because you can't make chips, including memory chips and GPUs and TPUs and custom ASICs. You can't make any of them without the lithography equipment, and ASML is basically a monopoly on the most advanced lithography equipment out there. And I just have to include this one Elon clip as a teaser of what's happening in the world of Elon, SpaceX, and Tesla.
Such that you can run anyone's AI on hardware or software on the Tesla AI satellite, or SpaceX AI satellites.
Tesla AI satellites? There's all this speculation that SpaceX is going to acquire Tesla. What if Tesla acquires SpaceX? No one's talking about that possibility. Video coming soon. Probably not. But let's get back to AMD and what might go wrong with the story we're telling. We've talked about the upside. Now let's talk about what might go wrong for AMD and for AMD stock. I'm going to go through 6 risks that might be a problem. I think some of them are very likely to be a problem, some of them less likely to be a problem, but there's wild cards and everything in there. I think the biggest risk that the mainstreamers in the market will tell you is that AI isn't going to grow that much. 5x growth in AI demand isn't going to happen. People are going crazy. The AI demand isn't there. I can only say I think this is nonsense. But if you believe the regular people out there, the normies, AI demand is a story. It's not really going to happen. And if you have concerns about that, then AMD's PE ratio of 160 is a big concern. There's stories about companies like Uber cutting back on their AI spending, on their spending on AI coding. I think that drastically misses where AI is going. AI is going to have such broad effects across society. The demand is going to go up. Killer apps, AI real-time video interaction with, an AI character. There's so many things that are coming, and killer apps we can't even see coming. I think 5x is actually an understatement of where demand is going in the near future, and I don't think there's any problem for AMD with this particular part of the story, but you should be aware of that risk. A more conventional risk is simply that AMD doesn't gain share, and I think this is a very serious problem. They're facing off against two in particular, two very, very strong competitors in NVIDIA and Broadcom. I'll show you a little later. The CEO of Broadcom appeared on a podcast, and I encourage you to watch that. But Jensen Huang is not going to give up market share easily. Broadcom is fighting tooth and nail for their market share. Then you have like Google and Amazon working on their own hardware. You have Tesla working on their own hardware with SpaceX. Does that ultimately cut into the growth? Even if you have the growth, if some of that growth goes somewhere else, that interferes with AMD increasing their market share. So I think that's a legitimate concern. That I think a lot of the people who are pushing AMD are saying their market share is going to grow. That's a fundamental part of the AMD story, why the PE ratio is so high. Is it credible that AMD will double their market share or even 50% increase their market share. I think that's a challenge. And I don't think it's obvious that they're going to get there, but it is a common story that a lot of people are telling that because they're low price, because they're executing well, at least by all appearances, they may very well double their market share or at least increase their market share significantly. Even if they just increase it 50%, a lot of the story we're talking about and a lot of the gains we're talking about in the stock are still there. Risk number three is loosely related to that. Well, what if the margins just don't go up? What if AMD has to keep cutting prices in order to take market share from NVIDIA? What if AMD isn't able to get their cost structure down so they're not really able to increase their margins as much as we talked about? That's a potential hit. Just one of a list of things I think it makes sense to worry about. Risk number four, I think, is a really, really large risk, which is just execution. It's really hard to succeed in these businesses, and one misstep, one critical error can really impair your ability to grow, your ability to deliver at reasonable price, your ability to get margins. AMD has been executing really well, and that's an indication they're likely to continue executing well. But when you're looking at risks, execution is a big risk for almost any company you're talking about. And we talk about it all the time with Tesla. It's obviously a risk for Nvidia and everyone else in this space. If you don't execute well, you're going to fall behind. You're going to have problems. Risk number five is my big one. It's the horse I've been beating to death for a while now. Is the supply chain for AI is complex, has serious choke points, and there's a lot of potential fragility in there. We talked about ASML earlier. ASML is a choke point in the supply chain. I don't see how AMD can 5x their size if their suppliers don't grow a lot faster than they're growing. You have ASML in the supply chain for TSMC, which makes the chips, and you have Samsung and others make chips. If the chips don't grow fast enough, then even if demand grows, if you can't produce enough chips to serve your customers because your supply chain isn't giving you what you need, then you can't get the growth that we're talking about. So that's probably in my mind the biggest one, and the biggest place where just one chink in the armor can slow everything down. You know, one fire in one factory, one earthquake, one geopolitical situation, one virus. There's all these things that can just throw a wrench somewhere in the supply chain that slows everything up for everybody. And the high flyers, the ones with the highest PE ratios, are the ones that are going to fall the most if that happens. So that, to me, that's the biggest risk facing AMD. And then the final risk that I think is a risk for everyone in the game is that a teenager somewhere in the world is in his mom's basement, comes up with a new algorithm that changes everything with AI. Will it happen? When will it happen? We've seen it again and again in the world of technology that some college dorm room, some garage somewhere, somebody comes up with a new technology that changes everything. And I think there's a fair chance that's going to happen again. Whether that new technology changes everything, or one of the market leaders acquires it, or it gets dispersed quickly. Those are all possibilities, but that's just something to be aware of. We're going to get back to the AMD story in a minute, but just a quick update on PodWatch. Great interview with Broadcom CEO Hock Tan. I thought the questions, the interviewer sits down, and his first question, he doesn't say it in this way, but it's basically, "Oh, your business is really screwed, isn't it?" It was really striking to me how aggressive the interviewer was in his questions. Bloomberg interviewer going after Hock Tan, this is the CEO of Broadcom, and this guy blew me away with how great he was at handling these aggressive questions. Super smart guy, very exciting. One of the better CEO interviews I've watched recently. Next, you've got Demis Hassabis was at Stanford. Demis Hassabis is the head of Google DeepMind. He is one of the brightest minds in AI, if not the brightest mind in AI. And I didn't love the podcast. I didn't think we got a lot out of Demis we didn't already know. But if you're not really familiar with him or you're not familiar with the overall picture, I thought it was a good conversation. There were some good bits. The thing that burned me at the end was the students asked question. It was like business school students asking about the global south and somebody from the sustainability school. There was no like, he's very optimistic, but the questions were all like doom questions. Like, how about some positive outlook? Why is everybody so negative on everything? And why is the answer to every problem government when the government is usually the cause of most of the problems? That's a particular criticism I have. Bloomberg had a fairly short interview with Ray Dalio, and This headline is misleading. It's not really what Dalio said. He was really talking about the larger economy, maybe in a bubble that will eventually burst. I don't think he really came down that hard on AI and where AI is going. He was somewhat critical. He had some interesting thoughts about it. And I think this is worth seeing. Ray Dalio has made a lot of good calls about the future. I think he tends to be overly pessimistic at times, although that doesn't mean he's wrong. And if you're not following Ray Dalio and you're not looking at his perspective on history and where things are going with the US and China, let's say, definitely worth watching. And his talk about, government debt, private sector debt, all these things and how there might be bubbles. Ray Dalio is a thinker who's worth following and paying attention to. And this was a good conversation. I would say try to get more out of Ray Dalio. Look for more Ray Dalio talks, and I think he has a book or he has he has some long form videos that are really worth watching. Last one is the All In Pod. Had a great conversation about what's going on with SpaceX, Anthropic, OpenAI, companies staying private, companies going public, what's going on with private equity, what methods are there to try to bring retail investors into the venture capital world. Very good conversation. I really enjoyed this one. I usually enjoy the All In Pod. If you're not already watching the All In Pod, I think there's a lot of fluff in the All In Pod. There's a lot of stuff that maybe isn't as exciting, but Brad Gerstner was fantastic in this. Gavin Baker was on. He's also fantastic. So this was a fun watch. So let's close out the AMD story. There's a positive side where you can see the stock going to $5,000 a share in the next 5 years. You get a 10x. Great opportunity. I think there's a lot of opportunities with a lot of AI stocks. AMD is certainly one of those companies where there's a lot of promise for the future. For me personally, the high PE ratio and the various things they have to do to get to that 10x and the various risks that they face going along the way make it challenging. I haven't turned into a big AMD bull. I do think they're a stock that's worth watching. I think that there may be real promise there, and I might be wrong in my assessment of their execution, the market, the risks that they face. So if you are a big believer in AMD, you need to dig deep. You need to decide, how are they going to handle these risks? How are they going to execute? How are they going to get their supply chain to get them what they need? How are they going to outcompete Nvidia and Broadcom? What is the secret sauce that I don't see, that I haven't shared with you, that you see? Let me know in the comments. What am I missing about AMD that gives them this special edge that's going to take them over the top? I'd love to hear what you think. I do some special videos about long-term call options, and AMD plays a particularly interesting role in those videos. I love thinking about AI companies, and AI stocks from a long-term perspective, not trading short-term stuff, but long-term investing. And I think you can use long-term call options for that purpose. I discussed that in those videos. You can use this kind of thinking to help you evaluate long-term investing, long-term options as part of that, but not necessarily, but just thinking ahead. What do these long-term options tell us? And I have a unique ratio I developed, a unique metric for evaluating these long-term call options that reflects on the long-term investing viewpoint of all of these companies. And again, AMD is a standout. These videos are for YouTube channel members, ex-subscribers, and Patreon supporters. Please consider joining my YouTube channel, becoming an ex-subscriber or a Patreon supporter to get access to those. And thank you so much for watching.